We're going to talk about the rest of corporate America and the health when you compare it to the overall U.S. economy. And it's like looking at two different worlds. We've got profits at big companies, they're booming, while wages for the middle working class, some would argue, have remained relatively flat. Karina Huber investigates.
The U.S. stock market hit record highs this year, with the major indices now up 18% year to date. It's been a very good year for investors, partly thanks to record profits at American companies.
Corporate profits have come back from a low in 2009 all the way up to 12.6% of GDP. So by the most standard measure that we look at, corporate profits have been booming here in the United States over the last 4 years.
Booming, especially for U.S. multinationals, selling products or services in fast-growing economies like China and India. Bliss says monetary policy also has helped boost companies' bottom lines.
Their cost to borrow money has been driven down to near zero, so they can borrow money and they can do with it whatever they want. They're not necessarily investing in workers and plant and equipment, but they're borrowing money and doing a special dividend back to their shareholders.
Shareholders and company executives who continue to reward themselves handsomely have been the chief beneficiaries of these profits. But companies in general are hoarding a lot of their gains too. U.S. firms have roughly $3.5 trillion in cash reserves on their balance sheets.
And American corporations are parking more of that money offshore to avoid paying the 35% U.S. corporate tax rate, among the highest in the world. But that means less money to build bridges and roads that could help regular Americans.
American workers are largely missing out on the windfall profits earned by corporate America. Wages for most Americans have remained flat or fallen when adjusted for inflation. At the same time, U.S. workers are being squeezed to do more work. Productivity has been consistently on the up and up. The problem, experts say, is workers have little leverage.
The bottom line is the size of the labor pool that is seeking full-time employment at a good wage exceeds the number of jobs of that characteristic.
Experts say the sharply contrasting differences between the health of corporate America and the rest of America is reaching a tipping point that could end up hurting U.S. companies. If Americans can no longer afford to buy their goods, eventually their bottom lines will suffer, say the experts, a vicious circle that benefits no one. Karina Huber, CCTV, New York.